Hey traders, checking in on the stock market today. FOMC volatility in both directions multiple times. We'll check in on that. In the end, the bears have complete control. Believe the bears as long as they keep proving to us that they have this control with the trends. Weekly, daily downtrends, that's all I need to know. I have a bear lean as long as that's the case. I'm not going to look for bulls to show up at a certain level. They eventually will. But for me, it's just the trends. Change the daily trend, I'll change my tune. Until then, daily bear flags have confirmed. Bears have the edge. Everything that was holding out for the bulls has been lost in the short term, specifically XLF and XLV supports. So I'll look at that in just a moment as well. But S&P 500, we had the broadening megaphone, the megaphone from yesterday, and it played in play very well today. And it was the initial level that we bounced off of on the FOMC bounce initially. If you look at the 15-minute time frame here, we bounced off of it very nicely all the way up to the high of the day, and then we rolled over and gave it all back. Again, it's hard to trust the moves in either direction during FOMC, so I always want to be protecting, and this 2-minute lower high was a nice spot for bulls to hedge or to short. And so that's what I did personally. Let's see what time that was. Scouting a 2-minute lower high here for my last attempt at a bear position today. I got stopped out at break even, earlier attempt, 2:55 p.m. And that was right there. So the initial way to play this reaction was a nice equilibrium. And so we had that, bounce initially, rejected from EMA 12 on the 2-minute, a double bottom, lower high, higher low, and then Powell started speaking at 2:30, bull reaction, and then we rolled over and bears controlled the end of the day and drove it home with fresh lows. Have to keep in mind, we're not oversold on any time frames right now. So can we keep dropping from here? Bears have had control forever. Yes, because we've been bouncing and cooling off RSI. We're not anywhere near extremes anywhere. We are oversold on the hourly and 4-hour, but we've seen it get way uglier than this. So again, I am a bear as long as we are in weekly and daily downtrends. Next time we bounce, we're going to look for hourly lower highs. If we open higher tomorrow, I'm scouting hourly lower highs. And I'm just going to keep it simple. Bear lean until proven otherwise. Semiconductors stood out stronger today, and it was an unusual day where I was looking around and saying, why is QQQ holding up so well? Apple started the day strong but rolled over, and I couldn't figure it out, and then it was NVDA. I didn't realize NVDA was the 8th largest holding in QQQ, so the semiconductor sector does not have a major factor in QQQ, but NVDA, the individual company, does. So that was notable, but SMH closed at the low of the day, just a daily lower high, and looking at support of 199.41 in play. NVDA, upper wick, EMA 12 resistance. If we break the low of today tomorrow, our daily lower high is set, and we'll be looking back down at 126.17. Tesla. Tesla is now forming a pretty hard resistance wall here. Triple top just around 314. You can see 313.61. Let's just make this a support zone or a resistance zone. 1, 2, 3, 4, 5 rejections from this $1 range. Close at the low of the day. Posted about it on Twitter, talked about it on the live stream with TheChartGuys members. Obviously, it depended on what the FOMC reaction was going to be, but the correlation shifting today from Tesla and Netflix is not surprising. Tesla and Netflix had the same setup. They both rejected from weekly resistance. So the entire time leading up into resistance, relative strength with the broader market. The number one reason that you will shift correlation from bullish to bearish or bearish to bullish is a key support or resistance holding. So as soon as I see Tesla and Netflix reject from resistance with a big upper wick yesterday, heading into today, I scout a bearish correlation. I scout for that correlation to shift. And if you look at Tesla divided by QQQ, you can see that we had the first red day in weeks, and we closed at the low of the day for the first time in weeks. And the way to anticipate that happening was recognizing Tesla had a key rejection from resistance yesterday. Netflix, same thing. 252 was resistance. We rejected from that level. Netflix divided by QQQ shows us weakness. Not as notable as Tesla, but certainly weaker than yesterday. Just the shifting correlation from bull to bear. Maybe it's just a high or low, and then we see continuation of a bullish correlation, but it's enough in a short-term trade heading into the morning to be scouting bearish. And I did scout bearish, but was stopped out. I was scouting an hourly lower high compared to 250 on the morning, and we didn't get that hourly lower high until the afternoon. So that's why trading is hard. You can be right and still lose money. XLV, break of that base of support. Close at the low of the day, fresh lows, looking down at the fear low, weekly, daily downtrend. Financial sector, break of the base of our support, looking down at the fear low from here. There's a gap all the way down at 30.67. I shorted XLF. Today, this 15-minute lower high, top fish the high of the day, and then held that position into the FOMC reaction, exited that on the initial drop. It rolled over into the end of the day, of course. IWM, fresh lows. Only major support here is down in this. There's a lot of price action down there just because it was an equilibrium. But down in the upper 160s, again, it's just the daily downtrend. I'm just keeping it simple. A lot of different traders have different styles where they'll be looking at, volume profile or retracement size or things like that to say, I'm going to go bullish at this level. And that's perfectly fine if that works for you. But for me, it's either extreme RSI levels for me to enter in the face of counter momentum. Otherwise, I'm not going to try and nail the bottom for daily bounces. I'm just going to scout hourly lower highs and daily lower highs as long as they remain. Biotech sector, break of support, 78.72 is the next level. Weekly time frame, downtrend confirmed, monthly lower high is on the verge of being confirmed. Solar sector, 80.24 is in play. If that breaks, the weekly bull flag is negated with a downtrend. And again, that would be the scenario where our relative strength bull turns into a laggard bear if broader market weakness continues. I like playing bullish. I have more fun playing bullish. I make more money playing bullish, but I can't be bullish in this market environment until it changes. CCJ, daily lower high set, 29.01. Looking back at the recent low of 27.15. If that breaks, daily downtrend continues. No sign of the weekly high or low. And we'll then be watching weekly EMA 12 coming into play. The dollar is all bulls. We know that. It's been that way for a long time. Weekly EMA 12, higher high. Lack of resistance. Weekly uptrend is our guide. Gold, daily bear flag. Silver tried to confirm the daily trend. Unable to do so. I'm still bullish silver comparatively as long as EMA 12 is support, as it still is here. And you can see how different it is than gold. Gold chopping around near its recent lows. There is a double bottom, and we didn't drop as hard as the broader market on that pullback. What did crypto do? Also held on better, 15-minute equilibrium. But overall, bears. Oil, still setting daily lower highs. Support of 81.73 and 80.89. Nat gas, scouting a daily lower high, anything under 9.25. Jobs numbers tomorrow, but just sticking with those trends. Scouting hourly lower highs next time we bounce. That was a quick rundown. I hope you had a great day. We will see you tomorrow. Make sure and do good things. Lots of space for hourly lower highs on lots of names.